Listen, you can miss me with the nonsense. You do not need to know what happened yesterday to take a 3-minute trade today. Let's go deeper. Hey guys, JD here. So somebody in the comments asked me to do a video on market structure, and they were not the first ones. I've had many comments over the last year asking me to do a video on market structure. So I said, you know what, I didn't have anything planned for today, so let me go ahead and look into market structure. So I took the weekend to study market structure because honestly, when I was getting that question, I didn't know what people were talking about. I've kind of heard of market structure a little bit. I was in a trading school and they kind of touched on market structure, but I really didn't know what people mean when they say market structure. So I took the weekend, did some research, and I see why people keep asking me market structure, because it's confusing. Every Google search, every time I went to Google and search market structure, I got a different answer each time. I got a different answer each time. So basically you could ask 10 traders what's market structure and you're going to get 10 different answers. But what I picked up from just doing my Google searching was that it's basically just figuring out what the market direction is. It's basically just figuring out what the big picture is currently, whether we're trending up, trending down, or in a range. The same thing the market cycle does for us. The same thing following the 21 EMA does for us. That's it. That's all it is. But you know what? I get it. People do not want to believe trading is simple. They don't. I believe I keep getting this question about market structure because people feel like I'm leaving something out or I'm not teaching something, because the powers that be have fed us all this fluff that trading is complicated. Trading is not complicated. I read through many articles over market structure and it was fluff. Some of it was good, some of it some of it was okay, all right? But most of it is just going to confuse you. Most of it was just going to make trading more complicated than it is. And that's the thing. Trading is simple, okay? Listen to me. Trading is simple. If you just learn the market cycle, learn the rule of two, follow the 21 EMA to determine the direction, whether we're up, down, ranging, and then have setups to take in the market cycle, that's all you need. I know you don't want to believe it. I get it. I understand that from your years of researching on the internet, from your years of hearing gurus say, using these big words that you can't hardly pronounce. I get it. That's internet stuff. That's just fluff. Trading is so simple. And I'll tell you what, as I was digging into this, y'all took me back. Y'all took me back to some places I didn't want to go again. Like one article was talking about, the market structure is support, resistance, finding the support resistance level using pivot points. Ooh, when I heard that word pivot point, y'all took me back to a place I did not want to go back to again. Okay? Listen, I read this book once. I still got it right here. I ain't gonna pull it out. It's right here. It's this thick. It's right here. I ain't gonna put the person on blast. I'm not gonna put them on blast. It's that thick, okay? In this book, they taught me all these indicators to use. It was like 3, 4, 5 indicators to use. They taught me about pivot points. And let me explain to you about what pivot points, if I remember correctly. Pivot points have something to do with taking the close from yesterday, maybe the open and the close from yesterday. You do some kind of math and you come up with like a pivot 1, pivot 2, pivot 3, which are these resistance levels or support levels that you put on your chart for the next day. And then when it gets there, you're supposed to expect for prices to turn there or something like that. That's the premise of pivot points. Garbage. Okay. That's garbage. Again, from my intro. Why do I need to know what happened yesterday to take a 3-minute trade today? Think about that. Why do I need to know that? All you're doing is complicating your trading. That's it. If you follow the 21 EMA, look at what's happened in the last hour, 30 minutes to an hour, you have the best chance of making money. What happened yesterday doesn't matter. That's just fluff. Consider the source, okay? I want you all to consider the fact that maybe these books that's out here, these teachings that's out here are coming from smart money, are coming from big money who wants you all to trade the same way and put your entries or put your stops in the same spots so they can run them. Consider the source. And I'll be honest, I didn't figure this out till I went to trading school and they pulled my coattail. Consider the source on most of the stuff that's out here you're learning. It's coming from the same people you're competing against. Just consider that. But man, when I saw pivot points, that took me back. That took me back to that book that helped me lose a bunch of money, putting on a whole bunch of indicators, and trying to use pivot points. Listen, when you get trading books that's this thick, that's a whole bunch of fluff. Okay, it's a whole bunch of nonsense and stuff that only is gonna make trading more difficult for you. If I was to write a book, it would be so small. They may be like, this is too small to be an ebook, dude, for real. Because that's how simple trading is. There's only like 4 pillars: market cycle, rule of 2, your setups, which should be second entries, higher lows, breakout pullbacks, rally-based rallies, range fades. That's it. And signal candles. There's like 4 pillars. That's it. Okay? That's it. So this stuff out here is just, y'all took me back to some very bad memories. Whoever asked me to look up market structure took me back to some very bad memories. I had this memory one time. So me and my dad started trading with $5,000. Okay. There was some robot out. I can't remember the name of it. It used the martingale system though. Hey, and it made money. It flipped that $5,000. We was up to 10,000. Then all of a sudden it stopped working. We was losing money left and right. And that's what happens with robots, because if the market condition changes and you're still running that robot, because robots are programmed to do certain things in certain market conditions. Anyway, so it started losing, man. So that was a tough break. So then me and my dad was like, look, maybe you need to learn how to trade by hand. There was these courses out. It was called the Triad Trading System. They're long gone, so I'm gonna put them on blast. It was called the Triad Trading System. They sold a big thick. The manual was like this thick. I remember when I printed it off, I had to go get more ink. The manual was like this thick, and then it came with a piece of software that you just put on a forex chart, and it printed an arrow to tell you when to go. Right. It wasn't until years later. Oh, I paid $2,500. We paid $2,500 for the course. We paid $2,500 for the book and the software. It wasn't until years later that I realized the reason we was losing every time I took one of those arrows is because the system was taking breakouts. The whole system was about trying to catch breakouts, take breakouts. And it wasn't until I read the manual from my mentor, which is I don't even know if it's 40 pages long, where I learned that most breakouts fail. Okay, most breakouts fail. So I printed off a manual this thick. I paid $2,500 to really flush. I think we flushed $5-7 down the toilet. To just flush $5-7 down the toilet, because we bought a piece of software that was supposed to save us, that was supposed to help us trade better. We just flushed that money down the toilet. Gave them $2,500, then flushed $5,000 down the toilet. Manual this big, teaching us to take breakouts. Teaching us to take breakouts when breakouts fail 90% of the time. See what I mean? Y'all took me back. I didn't want to go back there. Y'all took me to some bad places. Listen, if you come across a course, all right, and it's 100 hours, it's 200 hours. They say it's 200 hours of training. Skip it. Trading is simple. Listen, my course, the fundamental section of my course, I looked it up. It's 140 minutes long. The whole section. The whole thing is 140 minutes. My fundamental section is 140 minutes long. Then the rest of the course is showing you second entries, showing you higher lows, written out how to take them, then showing you videos of them in action, then showing you clips of them in action, so you can see, what we just learned in the fundamentals. That's it. I mean, you can go through my course. You probably can go through my course twice in the same day. You know why? There's zero fluff. Zero fluff. And also because trading is simple. Yes, I said it again. Trading is simple. But hear me out, because I want you to have a clear understanding. The execution of trading is simple. What we actually do is simple. Look. Trading is 10% buying, 10% selling, is 80% waiting. Okay? Most of the time you're just waiting around for your setup. Like we discussed in another video, you're just waiting around for price to get back to the 21 EMA. If you get a second entry with a good signal candle, you take it. That's it. All right? Trading is simple. What's hard is up here. What's hard is the psychology. What's hard is discipline, which most people don't have. What's hard is patience, which most people don't have. What's hard is putting in good trade habits, not over trading, risk management, not trying to blow your whole account on one trade. Okay, that's the hard stuff, not the execution. Do you hear me out? Not the execution. Pushing that button is not hard. Okay. Being able to follow a line up a chart, is prices above it? Okay, we're in an uptrend. All right, follow this line. Is prices under it? Yeah, we're in a downtrend. That ain't hard, people. Is the EMA going straight across? Or no, I take that back. Is the EMA roller coastering across your screen? We're in a range. That ain't hard. That's simple. Okay? So when you're trying to get education, we're trying to learn. If it's this thick, it's fluff. Trading is simple. It's only 3 things the market can do: trend up, trend down, or range. That's all the market can do. And so if you understand the market cycle, know what the market is doing, and then start to learn to wait, be patient enough to wait for your setups, be disciplined enough to take a good signal candle. Okay? Be disciplined enough to put in correct risk management and don't overtrade and don't risk 50% on one trade. You'll do a lot better. Trading is hard because of the mental game. People don't understand this is a mental game. My mind is going against your mind. My mind is going against smart money's mind. Okay, you see what I'm saying? It's a mental game. Who can mentally, trap you? Traps. Think about a trap. I often say, smart money trapped people here. Broke lore trapped them. Now they're heading up. A trap is a mental game. Somebody had a strategy that, let's put this material out. Let's tell everybody to put their stop under the lowest low. And then when they do, when we see enough people fall for our trap, we'll push prices down because we got enough money to move the market, trap everybody. Then we'll push it up and go in the direction that we really want it to go. That's what smart money is doing to you. It's a mental game. They're trapping you, right? I'll show you how to not take the trap and wait for them to take off, and we take off with them. That's how we trade price action. That's why it's important to know what's going on right now, not from yesterday. That's the trap. See what I'm saying? Y'all took me to a bad place. I hope you can hear me. Listen, I've given you all you need to. I've given you all the tools. My channel delivers. We have the tools. Okay. Learn the market cycle. Understand the rule of 2. Take solid setups. Wait for a good signal candle. Off the EMA with trend. That's your best chance to win. And that's all you need. Everything else is fluff and nonsense, and it just complicates trading. That's why we don't have no indicators. I ain't got no stochastic. I ain't got no CCI, SSI, DWDI, POP tie. Whatever, all that nonsense. We ain't using none of that. We're using pure price action, price movements with a 21 EMA, a zigzag indicator, only to be able to count legs faster, analyze faster. Use the 21 EMA as your best friend. It's going to tell you whether we trend it up, down, or range. And stay with that 21 EMA and take good solid setups that happen on or off the EMA. Boom. It's simple. Again, I say, trading is really simple, the execution part. The hard part is the mentals. The hard part is dodging all the fluff that's out here in the marketplace. If the trading book is this thick, skip it. I'm trying to tell you, it's nothing but fluff and nonsense, because everybody knows human psychology. If you see a big thick book, you automatically go back to grade school where we had to have big thick books to learn math, English, and science, and you think because the book is this thick, the answer must be inside. Nope. You better find you a 40-page manual like I did. You better I'm telling you, if I wrote a book, it'd be. I've often said that I like Rainer Tio's book, Secrets of Price Action. I think I read it in a weekend. It's a short read because trading is simple. The hard part is up here. If the book is this thick, I'm telling you, skip it. It's nothing but fluff. Don't flush your money down the toilet like I've done over the years. Just believe me when I say trading is simple. It's the mental part that's hard. All right. So I know I went in pretty hard on this one. You did it. Whoever asked me to revisit market structure. I mean, I had no idea when I started Googling that I was going to see those two words, pivot point. Man, I saw that pivot point. I was triggered. I've been going off all weekend. Took me back to a dark place. Man, you took me back to a dark place. It was dark, man. You know what I'm saying? I'm losing my dad's money. You know what I'm saying? He's believing in me. I'm trying to make it. You know, I'm studying as hard as I can study. You know what I'm saying? I'm believing that, no, these people know what they're doing. You know, they giving me the real, you know. I bought this. They wouldn't sell me these arrows for $2,500. It's not gonna work. I'm gonna keep taking these trades. I'm gonna keep following this manual. And I kept losing, man. It took me to a bad place. I kept losing, man. It was rough, man. It's dark. I mean, I know where you are, man. If you've been struggling, and it's because you've had the wrong information, you know, you can get my course and still struggle, because you can get the right information and still struggle, because the hard part is up here. It's up here. But man, when you have the wrong information and you don't have the mentals, you DOA. You dead on arrival. But hey, you know, I'm thankful to Yahuwah that's over with. That I did find a 40-50 page manual that taught me everything I needed to know about trading in a weekend. And from there, it's just practice. Because mastery requires practice. So after you get the right information, it's just practice. And you will see yourself getting better. And you will begin to make money. So you do not need market structure to make money. What you need to do is understand the market cycle. Understand the rule of two. Understand where your setup is going to come in the market cycle. And wait for prices to get to the 21 EMA. Wait for a signal candle off the 21 EMA. And you will see your trading improve dramatically. I think I said that right. Came out a little suspect. But this is a long video. And y'all took me to a dark place. I'm trying to bounce back and get happy again that I found price action. And so, all right. Let's do a quick work study lesson and then get into the bonus. All right. Stay tuned. Hey guys, JD here. So this will be our work study lesson for today. I was trading the Euro USD. So coming here, and you know, we had trend down. That's 3 or 4 legs back. And then once we break under the EMA here, it's time to start looking for shorts. So we get this push down here that broke under the EMA. And then 1, 2 attempts to get back above it, and it couldn't. This candle pushed down, closed lower than the one to the left. It didn't close on this bottom, left a little stem there. So it's
It's kind of iffy, but knowing that I should get a leg of this distance, this is like a trend down, trend break retest, I'm assuming. So I take that and 1, 2, 3. So win. Or you could wait. You could say, hey, I don't like that signal candle. Too much stem. I'm gonna wait. Then you get another push down. Look at this, pushed up, close on this top, like we finna go back higher and test here. And then when this candle breaks higher, traps everybody going long because this part of the market cycle is over. Push down very strong. Didn't close on this low again, left some stem again, but closed way lower than this one to the left. And this is a hammer up. You see a hammer up, it's supposed to keep continuing if there's any kind of, buying pressure behind that hammer up. Same thing with hammers down. So when this hammer up fails like this actually might be a failed second entry long. See, first entry, yeah, it really would be back here. But yeah, when that hammer fails like that, and then the next candle turns right back down, we're right back under the EMA, closed on this low. I like this one better than this one. Either one of them work. 1, 2, 3, they both work. Then now we get the high, push down, lower high. Typically you want this one to be a signal candle, but it dudded out, so you can't take it. But then again, when this candle surges lower like this, it's not right off the EMA, but it's pretty close. And almost close on this low. I mean, a humongous, beautiful, strong candle like that, I'm taking it because my target is right here. I'm taking that. 1, 2, 3. That's a good one. Now, there's certain, I've discussed that there's certain ways to do a count when you're looking for second entries. You can do it by color or you can do it by stem. I prefer color, but sometimes I will do it by stem too. But you have to make sure you start your count from the lowest low. So, somebody would have started from here, which would actually been accurate. So this would have been their first entry right here, actually. And then this would have been their second entry to go short. I hope they wouldn't have taken it because that's a dud signal candle. But this is the actual proper candle to start your count from because this stem is lower than this one. So you push up, you push up, you push up. Then people make the mistake of, just wanting to take a trade. And so you actually could count this as a first entry, push up, second entry short. That's inaccurate also too, because the way you count is everything has to be, if this stem had a broken lower, that would have been considered a leg, but it's not. This stem is higher than this body. So this is still all one leg up. All this is one leg up. So your first entry actually doesn't come till here, which is why I didn't mark this, because you can't take it. This is just the first entry. This is a beautiful sign that we're going lower here, but again, that's not even the first entry. That's still just the one leg going up until it pushes down, till this candle breaks lower than here. That's your first entry, and we don't take first entries. So you have to wait, but then it pushes down, pushes back up. So now so this is leg 1 down. This is leg 2, but it couldn't go up anymore. But this candle doesn't break lower, so you're still waiting. Now when this one breaks lower, this is actually the trigger of the second entry, but then it closed up higher. And of course, that's a lot of stem, so you don't take that signal candle. So you're still waiting. This is a very shaky second entry short. Very shaky. But then this thing surges up like it's finna take off to maybe a trend up, trend break retest. But look at the rejection right off of an EMA touch. I love that. So you got a huge rejection stem right off of an EMA touch. Then you get a big boy body following it and nearly closed on its low and cleared everything to the left. Your target is here. I'm taking that, and that's the homer of the day. 1, 2, 3. That's the homer. And then we gotta wait, because we gotta wait we're too far away from the EMA to do anything else. So please don't take this low. If you consider this a high, push up, lower high, which you shouldn't, because they're way too far apart. But even if you did, please don't take this, because you saw this rejection here, because number 1, the signal candle is terrible. And number 2, you're way too far away from the EMA. That's like taking that hook. That's like taking a Kareem Abdul-Jabbar hook shot from the 3-point line, or this is like from the half court line, because you're a mile away from the EMA. Again, the best entries always happen on, off, or around the 21 EMA. So you have to wait. So what we're waiting for is a second entry to happen somewhere in this area. So we would be waiting. This is your first entry. This still barely broke lower than this one. And then it would push up. This is actually your second entry short triggering right here. But again, terrible signal candle. We wouldn't be taking that because we don't take terrible signal candles. And luckily you didn't, because if you go right here, you lose. All right. But then when this candle broke lower like that, this is like the new low that you would start your count from. So now if you start your count from here, first entry, push down. Now this candle didn't make it lower than this one. So this is your first entry. And then we push up. Boom, second entry short right here. Now, you may be thinking, how do I know this is a second entry short? Because this candle didn't break lower than like this green one or anything. That's just, you just kind of get to, when you trade long enough, you just kind of know. And maybe I really shouldn't call this a second entry short per like the stem counts or everything. But let me tell you what I see. Looking from here, this is a trend up. This was a trend break. 1, 2 legs up to a new high. So guess what? This little baby market cycle is over. This retracement, this minor retracement, it's over. So again, the dominant direction is down. So after I see 2 legs up of correction and look at the rejection on that stem, and then it almost closes on its low, it has distance back to the EMA. The EMA is always going to act as a magnet when you're far from it. So even if you don't see this as a second entry short, you can look at it as, you know, that the rule of 2 has played out. This is why you need to learn the rule of 2. You can see the trend up, trend break right here. The zigzag is helping us see it. Retest to a new high right here. And so I know that this market cycle is more than likely played out because I'm not expecting prices to keep going up. This is we're in a downtrend. So with all that stem and that body, I'm taking it. And I expect the EMA to act as a magnet. I'm taking it, but this may be a little bit more advanced, right? Because it's not off the EMA. So it's a little riskier, but it's money. 1, 2, 3, you get it, right? But then you could have just been patient and, well, it wouldn't have worked out, but here's a high, push down, lower high. This would typically be your signal candle, but it dudded out, can't take it. Then you got another one, dudded out, can't take it. Then unfortunately, if you take this big monster right here, you lose. 1, 2, 3. You know why you lose? Because you would be entering a mile away from the EMA. Again, don't take sky hook shots from the 3-point line, right? You want to enter up here. It's much better to enter. It'd even be better to enter without the on the wrong side of the EMA than to enter way down here, because the move has already happened. You know, it's already went too far. So sometimes you just gonna miss one. I mean, you know, if this had given you a good signal candle, 1, 2, 3, easy win, but it didn't. You know, that's just a discipline thing that you have to, don't take bad signal candles. It's just not worth it. Again, a good trade is gonna come along. So yeah, so you would have got, you know, nothing. You wouldn't have taken this bad signal candle. You wouldn't have taken this bad signal candle. You wouldn't have taken this too far away from the EMA. So we don't lose money right here. Patience saves the day. Then you get a double bottom right here and you push up. Now this is really a first entry, I'll be honest, because you wouldn't start to count from here. Because if you did start to count from here, you would have had to reset it right here, because this candle broke lower. So you really would start to count from here. And that's actually just a first entry. I'm kind of trying to see why I marked that, because that's just a first entry. Let me see. Why did I highlight that one? Because that is nothing but a first entry. Scratch this. I don't have nothing to really scratch it with, but I don't know why I marked that. That's a first entry. We don't take first entries. It's a nice signal candle. It's definitely right off the EMA, closed on the low. Maybe that's what I was thinking about, or maybe I was counting wrong. But this low, it's the new low. So that's just nothing but a first entry, which you couldn't take. Then you got another matching bottom. Nope, this one broke lower too, so this starts to count over. But then we surge up. You know, we surge up. So again, nothing to do. We're in a We're in a downtrend, so we're not looking for longs. But then again, the zigzag helps you out. This is nothing but a trend up, trend break, retest the new highs now. Okay, so once you get that market cycle to play out again, now you can start looking for shorts again, and you get a high, push down, came back, lower high, then you get a monster signal candle, broke higher, trapped everybody going long right here, push down, well past the bar to the left, nearly closed on this bottom, and you still have room back to the EMA. I love this one. 1, 2, 3, that's a win. Now, unfortunately, it sets up again. You get a high, push down, lower high, nice rejection stem there. Couldn't close above the EMA. You're thinking go time. It didn't break higher to here, you know, and this candle left a little stem. But I understand if you took this, and unfortunately, it's a loser. 1, 2, 3. Only reason I can say why that trade lost, too much stem on the signal candle. You know, too much stem. You probably took it though because it broke lower. So it happens. You don't win them all. Hey, I've never said price action was perfect. You won't win them all. But that's why you only risk, 1%. So if you lose one like that, no sweat off your back. Catch the next one. And it comes, let's see, you would have entered, you would have lost 1, 2, 3. It would have came two bars later. Got another high. Pushed down, came back up, lower high. Broke higher. Well, we didn't break higher than this down, but pushed up, trapped some people. Then shot down with immense pressure. Closed back well under the EMA. Nearly closed on this low. Hey, I like this one. 1, 2, 3. That's a win. Then you may have saw the same thing again. High, push up, lower high happening under the EMA. This is a warning shot, don't go long. This is a warning shot, don't go long. Then you get nearly perfect signal candle right off the EMA. Closed on this low, closed lower than the one to the left. 1, 2, 3. Oh, it's a loser. Man, it's tough. You won't see that a lot, but it's the market. It happens. It's the market. It happens. This is why you don't risk too much. This is why you have to have solid risk management, because hey, sometimes it just don't work, right? Sometimes it's just not your day. Sometimes the market sometimes the market gonna win. So you don't win them all. That's a nice setup. That is a nice setup. It just didn't work. Hey, and that happens. Let me see if I can find a reason why that didn't work. The EMA, it's still kind of, hey, that's a nice setup. It just didn't work. Only thing you kind of can say is that we had a trend down, trend break, and that was the retest to a new low. So that market cycle was kind of over, but that's a stretch. I like that trade. I'll just be honest. I like it. It just didn't work. But then happened again. Get a high, push up, lower high. This candle broke lower, closed lower than the one to the left. Didn't close on this bottom, left a little stem. So it's shaky. And man, did you have to, man, was you scared? Because 1, 2, 3, it's a winner, but it's a winner by a hair. And then it kind of happened again. Now this one I like because of these two back. And if this is a beautiful candle right off the EMA, surging lower, closing on nearly on this low. I just like this because it's off the EMA. I'll be honest. I don't even know. I can't even really put a name on this setup. Well, actually from here, it's a first entry, second entry short. That's what it is. Here's the low, push up. That's your first entry, push up. This one closed lower. That's your second entry. That's a congested. Hear me when I say congested. That's a congested second entry short right off the EMA with a humongous, beautiful signal candle. I like it. Boom. 1, 2, 3. Then you get the high, push up, lower high. This one is this one's kind of risky because it ain't off that EMA. Got a little bit distance from it, but now you got a lot of stem. Your targets are here, 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 and here. I like that one too. You take it one. That's the homer of the day. 1, 2, 3. There you go. So that's the chart lesson for today. Hope you guys was able to hang in there with me on that one. But hey, lesson is that you're not gonna win them all, but out of 1, 2, 3, 4, 5 6, 7, 8, 9, 10, 11, 12 trades. That's 10 out of 12. Not too bad. Not too shabby. Not too shabby. In a, let's say, what time is this? 6:30. Let's just say 6:30 to 8. Hour and a half of trading. 12 trades, and you you grab 10 of them. Hey, I think I'll take that any day. So that is the work study lesson for today. Of course, I thank you guys for staying this long. Please hit the like button if you haven't already. If you have not subscribed to this channel, hey, we teaching trading over here. We teaching pure price action trading with wonderful high probability setups. So please subscribe and stay tuned. And as a bonus for staying this long, I do have a trade example for you. And so we'll jump into that right now. I'm signing off. My name is JD. And as always, I wish you increase on the Sutton. Bye-bye. Today is November 12th, 2023. Clocking in. Let's see what we can see out here. All right. We had a huge move down for the euro. Huge move down. Then we got 2 legs back, then 2 legs down, not per the zigzag, but just looking at actual legs, and then trend up, trend break, 2 legs up to new high. Now we are just pushed down under the EMA. We're coming off the EMA again. This was a nice leg down here. We would expect another leg with targets being here and here. This looks like a good setup. Get set up here. I'm a percent ready. 92% locked and loaded. Big strong signal candle right off the EMA. We got some warning shots here, but the overall trend is down. I would be expecting another leg of this distance. This is clearly a trend down, trend break, retesting the new lows. Expecting the trend to continue. Let's go. Did close lower than the bar to the left. We're in 3 minutes, expecting that this trend is going to continue to test this low here and here. 3 minutes. Okay, we got a little rejection on that candle. All we need here is for this candle to give us a chance. Push down. Push down, push down, push down. Push, push, push. Push, 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 push. Great win, and we in again. Another low, higher low right off the EMA. Big, huge candle. Again, we're still expecting to get to this low here, 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 here. Hey, thanks for watching. Please subscribe. And if you have time today, learn some more price action. My name is JD. And as always, I wish you increase on the Sutton. Bye-bye.